we wanted to share something that we've seen happen now a handful of times. We're on our morning Discord call. We have it every morning from 9:30 when the market opens till about 11 o'clock with some of the traders on the desk, and we're sharing kind of what we're seeing and the things that are working and things that aren't working intraday. And Radu actually pointed out this pattern that he's noticed a couple times, and we wanted to share it with you today and kind of hopefully allow you to add this to your playbook a little bit.
My name is Radu. I'm trading from France. I have recently become an SMB trader. I am mostly watching the QQQ ETF.
Let's talk about really quickly why you're watching the QQQ ETF, because people may be watching this at a different time, but March 17, 2022, I think the last 10 trading days we've had an ATR of like $9 or something like that in Qs.
Exactly, and obviously, I think this is something that is quite known within SMB. We are, of course, focused. It's a trading company focused on stocks in play, and that remains the core part of the business. However, there are times where really most stocks react based on what the market is doing, and I think that even going further behind the past 10 trading days, we could say that, at least my personal opinion is that we have seen this throughout 2022. We have seen massive movement in the ETFs, in the indexes, which is a good opportunity to trade the whole market. And when I say the whole market, when you trade SPY, when you trade Qs, or even IWM, basically you are trading the market. And this is a good opportunity because these indexes and these ETFs, they are very well priced. The bid-ask spread is very low, so it's a good opportunity for traders to trade these stocks, because, as you say, the ATRs are maybe 5 times higher than what we have seen last year at this time, or especially, for example, if you take the summer of last year.
And between the liquidity, you can get in and out with essentially as much size as you want. With the spreads, as you pointed out, these are just essentially stocks in play. And so we try and find the price patterns that make the most sense to us. And that's what we're here to talk about today, pattern identification. So let's see this unique pattern that we kind of had a little fun with in naming, but kind of show it to us and then we'll talk about it.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
It is funny because I decided to call this the Space Invaders pattern because of the resemblance to a character of a very, very old video game. I'm sorry, some of us are a bit older and used to play these kind of games when they were really when we were kids. And this is interesting because I have seen it, as I will show it to you. I have seen it on a daily chart. I have seen it on the 30-minute chart, and even on the really small time frames. And I have to admit that the reason why I discovered it is that, unfortunately, I got burned a bit of a few times. Why? Because this pattern, this is an example in February of the SPX. What you can see is that as the index or the stock is really starting to bounce, people start to look for long positions, taking a long position. And this usually happens when the downtrend is broken. The thing with this pattern is that the moment that you tend to believe that the downtrend is broken, for example, let's say that you have seen SPX go up 4 days in a row, and you plan to wait for a few days of to see some form of pullback. And when the stocks pull back, and let's say you have a downtrend that goes like this, a mini downtrend. So here, when you see now we have broken the mini downtrend, we have held the 10-day moving average. The yellow thing is the 10-day moving average. The green one is the 20-day moving average. So things look good. Things look like they're gonna now continue up. We have two averages. The 50-day is still a bit far. And then what happens is that you get a straight move down, and not even a straight move down, then you get also continuation. So let's say that on the 5-minute chart or on the 1-minute chart, when I try to do this, and this is something that I often do, I got burned a few times, and then I said to myself, well, look, this looks like a
character from Space Invaders. And you literally told us that, and I kind of laughed, but every time I'm looking at a chart and I see this pattern, it reminds me, and now it's an opportunity. It's no longer a threat, it's an opportunity. And it's actually a really good opportunity that we've seen play out a handful of times with very, very meaningful results when you trade it the right way. So hopefully you have a couple other examples that we can see real quick, and we can talk through how we've been talking about the way that we want to trade this pattern.
I do. So just a couple of words here. I just wanted to mention that this like what happens is that when markets change, patterns tend to change as well. So then you need to look for what is worked, because what was working before is not working anymore. And the volatility brought this a new bearish pattern. This one, of course, in the end, it's a fake out. It's a double topping pattern, but I call it a fake out because often what it does, it creates a higher high before reversing, and this is really what is confusing and can catch traders on the wrong side. Here's an example of 30-minute charts on the QQQ ETF or the SPX index, and you can see on the left side the chart is from March 8th to March 15th, and as you specified, Jeff, it's in the past 10 days we have seen this a lot, and you can basically see how it makes a higher high than the one 2 days before. And I would guess that on this particular day, when people saw this downtrend break, they went long. Then some people, maybe when they saw this huge bar up, maybe they could have added to the position, because then they said they told themselves that we have a higher high now, so we may move up, and then it goes straight down. And what's interesting is that the moves are really, really sharp on the downside. It's very difficult to let's say that to find the right entry. So sometimes you just, if you want to get in, and I'll get to that, you really need to take it when you see big down bars like this and with high volume. On the right side is the SPX chart from February 1st to February 14th, and we have the same like double topping pattern. This middle part is always confusing because we often talk about head and shoulders pattern, but this is different because it's like it's a double topping, but there's nothing really in between. So this is what gets people confused, because when you have this kind of consolidation and then we break out, then at least I am tempted to take a long position. And you could have done this if you only did it for like 1 day here. But if this was a swing position, then it definitely would not have worked, because then we moved straight down.
No, those are great. And it's fun. It's really interesting to see them, as you pointed out, on all the different time frames.
Exactly. So this is a 5-minute chart from March 14. I'm now getting into examples intraday. And it's also an example of how you can play it. We are starting, you can see the day extremely strong. We break above moving averages. This is a 5-minute chart. So we break above moving averages. We break and close above VWAP. So then you may tell yourself that, okay, this is going to be an uptrending day, and I'm going to look for long positions, like maybe on a pullback to VWAP or to one of the moving averages. So, and that seems to work until we get close to the previous high, but then boom, again, vicious and extremely violent down move, with very little retracements. So you can see that even these retracements, and I think you can also think about the kind of environment that we had with very news-driven environment, where news about the war, about the invasion in Ukraine can completely change the market. But again, the pattern is already there. We move down, we move up. It seems like we're gonna go up, and then we go way lower than initially thought. So one way to gameplay this is to make sure we trade along with the daily trend. So despite seeing this, I decided for myself to only trade in the direction of the daily trend. So only look for short positions in days like this. I know I'm talking about this in after a significant rally up, but here is something in a market. I'm talking about a market that has lasted already for a few months. So now the way you can play this is either you play the fail at the previous high, so at the previous high level, which is also obviously risky because then it can shoot up. Or if you want more certainty, you can play the break of the previous of the morning low, as I call it. It's not actually, the morning low is here, but this is where you can add.
But it's the pullback low, right?
Yeah, it's the pullback low.
Yeah.
Yeah.
So it's almost where everybody that bought is instantly wrong. And we're not talking about a pattern where it goes up and holds higher for a nice period of time. It spends less time holding up than it did consolidating before it really reverses hard.
Yeah, exactly.
And so, let's talk about where your stops would be in both cases as well, because we always like to talk about managing risk on our desk.
Absolutely. This initial entry, the one up here, is not so easy to define, because then you only have the previous high as the reference. But since we have seen that this pattern tends to go beyond that previous high, then I would normally I would say, okay, let's use the previous high, and then we put our stops there. But in this particular case, I will just make a calculation in terms of ATR, and I would use something like 20% of one ATR, since QQQ has, like you said, almost a $10 ATR right now. That would be more than enough to actually use this and make sure that if we go a little bit higher and then we reverse, then we don't get stopped out, because that's what happened in many times. So I would use 20% of one ATR and one ATR as a target. So then that gives you a 5-to-1 reward to risk, which is quite good actually for a market play.
And let's talk. So that's the more complex and probably the lowest probability version of this trade, because you're probably going to take your stop, way more often than if you wait for what kind of we talked about as the real trade. And so let's talk about the real trade.
I would say that the best entry would be right here when the pullback low is broken, and that gives them a much, like as you said, a higher probability.
Your risk reward won't be as good. It won't be a 5-to-1 there, though, right?
No. Absolutely not. But then I would not set my stop already right above the morning high, because that's a bit maybe too far away, and the moves and the volume is quite so if you really want to make sure, you can put your stop up there, but I would put it somewhere around here.
Maybe the high of the consolidation even? Like that, and that pullback consolidation?
Yeah,
Oh, interesting. I like that idea.
above this, because if the move is so violent, and you also see that there's a lot of volume, I mean, the bet is really on a really hard down move. So then if the bet is that way, then you can use a tighter stop. But if you really want to be sure, then your stop would be the previous high. Again, risk reward would then be 1-to-1, maybe 1-to-2. But then for 1-to-2, we would really need a very big move.
No, that's great. I appreciate you sharing this. This is really cool.
And then again, first target, because we also talk about targets. First target could be the low of day. And then depending on where we are in terms of ATR, your second target could be at 1 ATR, or otherwise you can use levels from the previous day. This is March 14. We go to March 13, or to wherever we need to go to see the previous levels, and then pick levels from there. I have one more on the 1 minute chart. This is actually really like a scalping one, and this is so clear as it breaks above the previous high. So the market starts when everybody thinks that we are chopping around at the open, and then we have a move up, a straight move down again, and then we move up violently again, make a new higher high, and then we move straight down, which is a really, really difficult pattern.
If you showed me the first half of that chart last year, I would think that we closed high of day.
Yeah, I would say that, for example, here, you would say probably that it's a perfect long entry, right?
100%. It's a great pullback to buy. But now looking at more of these, I recognize where we're adjusting, and we're making adjustments to make better trades for the market that we're in.
Yeah. And as I was preparing this presentation, this is today, the SPX.
An inverse Space Invaders, huh?
Yeah, and it looks like it's almost like, look how symmetrical things are, right? So you have this, you have this, you have this, and then you have this.
If we start to see more upside, maybe this is going to be the new trade. We'll just have to know which direction to be, whether we're going to be Space Invaders or an upside down Space Invaders.
Yeah, but it's really crazy, I think, how it's so symmetrical, right? Like this day on this day, and then this right in the middle.
The consolidation, and then it looks like we're going to go to new lows, and we don't, and all of a sudden we're back up at highs. It's a great high volatility market pattern for sure.
Yeah. So again, like any other type of pattern, this is not to be used okay, this is certainly what's going to happen. There's a lot of other things out there that one needs to watch. What's the news? Like we had the Fed day, obviously. What else is happening? What the volume looks like. So, but it's really interesting to see some of these things, because they tend to repeat themselves, and at least if you are to take a long position, or in this particular case, a short position, it kind of makes you wonder, and maybe you are even more careful than with the stops and the way you are managing risk. At least that's what I'm doing.
No, and it's great. I really appreciate you sharing this. I appreciate you having the gumption to call it out the other day. I know it was a little bit of a sheepish call out about the Space Invaders, but I hope it's a point of pride, because being able to recognize something like this and adjust your trading accordingly is a huge skill, and it's something that'll help you grow. We were talking earlier with another trader, and it's not about, I found this pattern and it's going to work every single time. It's the process of finding patterns that are working in this market, and the market's always going to change, and you're just going to have to find new price action patterns based on that. But that's sort of the fun that we have with trading, and sort of the joy of this is, when we can bring some playfulness into it with the Space Invaders, that makes it even better. But recognizing what's working in this market and recognizing how to adjust from it is a really good skill. So thank you very much for sharing this today.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.